let's take a look at what's happening at the global end of the spectrum. Remember, the Fed meet, and very important, the commentary that might come in from the Fed as well. Let's get in Nick Parsons of Thomas Lloyd Group joins us right now on the show. Nick, good having you. Thanks so much for joining in. We might want to comment on the new kid on the block, Aramco, as well. But first, let's start off with the big news, and that is the Fed meet. What do you anticipate, either in terms of action, if anything at all, or in terms of commentary?
Well, I think calling the action is the easy thing to do. The Fed will leave rates unchanged this evening. The Fed's come off a very, very difficult 12 months. 1 year ago, you'll remember, they were signalling that there were going to be 3 rate hikes this year, instead of which they've cut 3 times. They've given in to pressure from the president, they've addressed the concerns of financial markets, and they're in a position which 12 months ago they simply did not expect to be. So it's been a very, very bruising 12 months. So I think coming off that, they will be very, very happy not to have their hand forced again this time around. And I think their job really is to try to maintain the confidence both of the general public, of consumers and manufacturers and industrialists, as well as financial markets. And the best way they can do that is a commentary which suggests that there needs to be no change in rates over the next 12 months. Now, of course, saying that doesn't mean they don't expect a change, doesn't mean there won't be one. If we look at what futures markets are pricing, they're suggesting there's a 62% probability of a cut over the next 12 months. But I think the Fed's job tonight is to reassure businesses, is to reassure consumers, and perhaps most importantly, given the very sharp sell-off that we saw in the end of December last year, it is also to reassure financial markets. So if we saw the Dow Jones, the S&P, the dollar and bond yields close the session in the US this evening, roughly where they are today, the Fed will consider that a job well done.
Okay. The other bit is, how do you think markets react to the commentary from the Fed? I think almost everything seems to be pointing towards a market which is waiting for some bit of activity either on the trade front or from the Fed. Anything that do you think could move the market needle a bit?
I'd be very surprised, because the Fed doesn't really want to move markets from here. It would see the S&P at 3,100, the dollar index pretty much within 2% of where it started the year, and US long bond yields around 170, 175, as being consistent with its mandate and as being consistent with financial stability. So I don't think the Fed really wants to give too much of a lead. I think what it will do in the forecasts, because as well as the actions that we get tonight, we get a new set of Fed projections and we get a new set of dot plots. What it will do is the same that it's done for the last 7 or 8 years, which is to say, yes, inflation has overshot, but stick with us. We're fairly confident that on a 2-year horizon, it will be back up to target. GDP will be at or around 2%, PCE will be at or around 2%, and really nothing to see here. I think if the markets were to move after the Fed, then they might well consider that wasn't the very best worded statement that they could have put out. So I think really there's no clues for the market from the statement, but the Fed indeed would be very happy with that outturn.
Nick, just a follow-up, while everybody's looking at the Fed for now, I think the next few days would also be interesting from what comes out of the tariff deal, if not the trade deal. And today, or overnight, Bloomberg.com reported that China now anticipates that there might be a pushback on the deadline from Donald Trump himself. Now, one, how likely is that? And if that happens, do the markets get disappointed or excited in either direction? What is your estimate?
Well, I think trying to predict the president's next moves is a fool's game. He's, to be polite, he's capricious. He's not always consistent in what his statements say from one week to the next. But equally, it's very, very clear that the president and his team are very adept and very clever at supporting the market. We've not seen any single day sell-off greater than 2% for the best part of a year. And it's very clear that when markets do dip, we get what's essentially a White House driven plunge protection team comes very quickly onto the news wires, whether we see Mr. Mnuchin or whether we see the economic advisor Mr. Kudlow. It doesn't take very much of a fall in the Dow or the S&P to get them scurrying around their the TV studios. The best and most recent example of that, if you recall, was only Tuesday morning of last week. We had a fall of around 1.5% in the Dow and the S&P. There was some consternation about an imposition or an acceleration of the tariffs. And by Tuesday morning, right on cue, there they were doing the studios of the financial TV, yourselves and others, and the market duly rallied. So they're very, very mindful of day-to-day movements in financial markets. And so I think that's what's helping keep the sell-offs pretty much in check. Now, I've been surprised, if anything, at the gullibility of financial markets, that as soon as we get a set of headlines saying trade talks are on track, or there's going to be some agreement or only a very small postponement, then the Dow and the S&P duly rally and off we go again. So I think they've got a very, very adept media team, and the plunge protection squad, which we always used to be thought was based in the Fed, seems in fact to be based in the White House these days.
Okay, well, the other piece is, of course, the big kid on the block. I would refrain from calling it the new kid on the block. Saudi Aramco is listed at a 10% premium to its issue price on the Saudi Arabian stock markets. Let's get in Yusuf Gamal of Bloomberg News, who's joining us now from Riyadh. Yusuf, good talking to you. Thanks for speaking to us. Tell us a bit about this. It is surpassed estimates. What is it that locals are saying about what happens next? I read a lot of articles which spoke about how this adds to the depth of the Saudi market as well.
It does. I mean, it is a massive company, and even though a small percentage of total market cap is being put out there for investors, 1.5%, which is just a fraction if you compare it to any other heavyweight company that's listed around the world, it still adds a lot of liquidity to the main Saudi stock exchange. And once everything is formalized, it will make it the 9th largest stock exchange in the world, just a little bit more than India in terms of total market cap. But you mentioned the big spike we had, 10% up limit. That brings the valuation to $1.88 trillion. We started off with a base valuation of about $1.7 trillion. This is absolutely crucial in terms of the optics. You remember that a lot of the discussions that we've had with our experts is that the $2 trillion valuation was out of reach. And so now we're getting closer to it. It is still early days. We have until the end of the day, 3 p.m. local time. And then you go into the second day, of course, later on in the week. And what's going to be absolutely fundamental to this is the government efforts to try and make sure that that trajectory very much remains in place, with incentives, with government funds playing a role. And of course, the sheer size and scope of Saudi Aramco means that you could get a fast track to inclusion in some of the global indexes.
Nick Parsons is with us, Yusuf. And Nick, can I quickly ask you just heard Yusuf speak about what this does to the depth of the market, but also the surprise uptick that we've had. Do we have a new contender for the race to the $2 trillion mark?
Well, I think it's very interesting to see the way in which Saudi has now been propelled up the league table of international stock markets. It's now got a top 10 position. It ought to be able to, at the very least, consolidate that. And I think it is generally a good for the broader Gulf region. It's not just a Saudi success. I think it will be seen as a GCC success, the Gulf Cooperation Council. And I think as long as we hold, at least until we've all forgotten about it, until it no longer makes the front pages, and that probably takes a week to 10 days. But if in that week to 10 days we're able to hold above the issue price, then whether or not we get to $2 trillion really doesn't matter. As long as the float in terms of its early impression on investors' minds and memories. As long as that float is deemed to be a success, as long as it settles at somewhere above its initial price, then I think everybody will be happy. We still seem to be some way off a $2 trillion valuation. Obviously the stock was priced to go, and as your correspondent said there, with only a small amount of the actual stock in free float, it's always open to some degree of manipulation by the issuers and the sponsors. But as long as we can hold just at or around close within touching distance of 2 trillion as a valuation, then I think everybody would deem this as a success. But of course it's not the 2 to 2.5 range that we saw talked about 12-18 months ago. They have had to settle for something less than that, but I think everybody associated with this float would deem this a job well done if it were to settle at or around current pricing.
Well, absolutely, Nick. It's a job well done, and the listing has been better than what the street was expecting, because during the time of IPO, there were murmurs that the response was not that great. But Yusuf, before we thank you, just a question there. Today, there was a limit of about 10%, so it's hit that limit. This continues tomorrow as well?
Yeah, so tomorrow's a fresh day. So basically, the 10% limit still applies, and it applies to all stocks on the Saudi Stock Exchange. So it has the possibility to rally another 10%, but for the day that is the Wednesday, that is the maximum that it can achieve. So the $2 trillion mark is going to come into striking range during trade tomorrow. It'll be interesting to see whether that really continues. But one thing is for sure, that this really arguably sets the stage for further reforms from the government. We were talking to some key Saudi government sources, and what Bloomberg understands is that the Crown Prince is actually unhappy with the pace and the cost of some of the reforms. So the momentum to change and to tweak is very much intact, guys.
All right. Yusuf, thanks so much for joining in. Nick Parsons, thanks so much for joining in the overall perspective as well. Appreciate your time, gentlemen.